let's shift focus to our big discussion. This evening, we're talking about the LIC IPO. The process of filing a DRHP draws close. There was a board meeting today where some of the contours of the IPO were discussed, but no finality yet on filing the DRHP with SEBI. But here's what's exciting about the IPO. It's estimated to be anywhere between 70,000 crores to 1 lakh crore rupees. Now, just for perspective, the last largest IPO in the Indian equity markets was that of 197 Communications, basically Paytm, which was about 18,300 crore rupees. This is many, many times over. So what can we expect from the LIC IPO? We're going to talk about that soon, but first let me go across to Ankur Mishra, who's been tracking the story, to tell us what happened in the board meeting today.
Yes, what we are learning from the sources is that LIC board meet has concluded now, and we have learned that the policyholders quota might have already been approved in the board meeting. Sources say that around 10% quota is likely to be approved for policyholders, and apart from that, 5% discount to the issue price is expected in LIC IPO. The next process is that LIC is likely to file a DRHP with SEBI very soon, and after that the process of IPO will begin. After that, even SEBI will take time to approve the DRHP, and finally till mid-March the IPO may see the light of the day. What we also want to tell you is that to take a glance at how LIC stands today, and for that we have made few of the pointers, and let me tell you that LIC is ranked 5th in terms of life insurance premium. If you say in terms of assets, it is ranked 6th globally and 3rd in terms of gross written premium. We also will tell you in the next slide how compared to other life insurance company, it has fared till now. As I told you, 6th in terms of total assets. In the next slides, I will tell you that 10th insurance company in India in terms of brand value, and that's what the CRISIL report says. Apart from that, if you say in terms of share, the FY21 financials say that net premium income of LIC was well over 4 lakh crore. Apart from that, the total revenue was over 6 lakh crore, and the net profit stood more than 2,900 crore as far as the financial year 2021 is concerned, which also included 67% of persistency ratio, conservation ratio of 84.48%, and the solvency ratio of 1.76%. Apart from that, if you compare it with other companies, the IPO size and details will be something which we need to watch out. What we have learned till now is that around 65,000 crore will be the size of the IPO. However, we need to see the final DRHP, how it fares there. And the other key focus area to watch of the company will be that how it is faring till now, because what the financials we have got is till December 2021. Apart from that, other important ratios like margin, EV, and other parameters will be important things which will be cleared once we see the DRHP. Apart from that, if you see the slides on the future business strategy, how it is faring, that is normally mentioned in the DRHP, and that is something which will be clearer after DRHP is filed, and the capital allocation, how it has done till now. The latest data also shows that it has investment of more than 9 lakh crore in the listed firms. The key factors to watch out will be the risks also, that which are the risks which company is currently facing, and that is always mentioned in the DRHP which is filed with SEBI. So these are the things which needs to be watched out for once DRHP is filed with SEBI.
All right, Hemang Jani joining us today on the show. He's equity strategist and senior group VP at MOFSL. Aditya Kondawar, Chief Operating Officer at GST Investments, is with us, as is Harsh Rungta, founder of Fee Only Investment Advisors. Thank you so much to all of you for speaking with us today. Hemang, let me begin by your overview. Why are you excited about the LIC IPO? What are the factors you're looking out for?
So good evening, Tamanna. Thanks for having me. I think LIC IPO is a landmark event for Indian capital market with implications across the entire capital market ecosystem involving the stock exchanges, the brokerage firms, retail investors, depositories, and so on and so forth. Because of the sheer numbers that we are talking about, whether it is the policy holders, or the kind of market cap that the company would be commanding. Even the issue size, you very rightly mentioned that it's going to be much higher than what we have seen so far in the Indian IPO system. So I think it brings amazing opportunity for all the participants, all the members around this ecosystem. And most importantly, it is happening at a time when already we are seeing a strong traction in terms of retail accounts being opened across brokerage firms and at CDSL. So this could actually be a very big catalyst in terms of new accounts and will bring renewed excitement in the market. So I think we have a number of reasons to be excited about this IPO.
Do investors also have a lot of reasons to be excited about the IPO? Let's take a look at that facet. Aditya, of course, we know that if you have 29 crore policy holders and you're giving them an incentive to come in, that in itself makes it very exciting. But is it going to be a good deal? We know it has 2/3 market share, etc. Besides that, do we know enough about the business to know if it's a good bet right now?
Hi, Tamanna. Always a pleasure speaking to you. So rightly said, LIC, when we say the word LIC, right, the first word that comes to my mind is a giant. They have 30 crore policy holders. They have 13 lakh sales agents. They have 1 lakh employees, right? And, LIC is a market leader in non-protection kind of insurance policies. Prima facie, the company looks very interesting because you get to play the whole segment, right? Like you correctly said, 2/3 of the market share. But again, your team members said, the DRHP is yet to be filed. So we have to really wait and take a call as to what are the pros and cons. So when I talk about the pros, it's obviously the scale. And when I talk about the cons, right, the negatives, so it has to be, the LIC sometimes is used by the government for their own agendas. So, for example, in 2018, two defense IPOs were built out by LIC. The IDBI Bank merger was done with LIC. So, we have to weigh the pros and cons once the DRHP is out, and then we can take a call.
That's actually a very interesting point. Let me go across to Mr. Rungta for his view on that. At the end of the day, it is going to be another public sector company and a massive one at that. From what we're learning, the government might give up just about 5% of its stake. And listed public sector companies have not been given a lot of excitement by investors so far. That little question mark is always there. That will they run and make business decisions from the point of view of profits? Do you think that is something you would be looking at very closely, Mr. Rungta? And what would you advise to potential investors?
I think two separate things. Yes, definitely. In terms of the control that the government has over the central public sector undertakings, and obviously it has to, apart from the other stakeholders, it definitely the major stakeholder has a influence on the entity, and that sometimes makes it take decisions that a commercial entity may not otherwise have taken. Having said that, I think two things. One, the very act of going public, it forces transparencies. As they say, sunshine is the best disinfectant. And, the going public is really something that forces discipline even on the other CPSEs. The decisions are no longer in a private domain. They really come out in a public domain. And I think it is very good. Also, that various points of time CPSEs have done well. So maybe currently they may not be doing so well, but at various points of time, they have done well when certain policy decisions were taken by the government. And eventually how they will do or not, that will be known. Coming back to, what is the advice on the IPO? I think a lot of details is still to be known. That's one. Two, I think because the company itself is obviously good. I mean, any company of this size in a life insurance business where it sits on so much of cash, you get it in advance, and so therefore clearly that's an exciting business. But what valuation they will put on it, etc., will really decide whether it is good for a shareholder or not. But the third point I have there is that for a retail investor, should they be looking at IPOs at all? Okay, I think if they do, they should have certain, whatever is their money, they can have a certain portion of that money, what I would call a discretionary portion, or some portion where they can sort of allocate it to investing in IPOs.
Right.
Otherwise, my view is retail investors should stick to collective instruments like mutual funds, and they will do those investments if needed.
But look at the messaging that has gone out so far, that you need to update your PAN card, open a demat account. The point that Hemang made, we probably see an influx of a large number of retail investors now coming in. But Hemang, I want to come to you on the point that Mr. Rungta made on whether retail investors should look at IPOs. And let me bring in some context of recent IPOs, which were very exciting. Everyone was very excited about them. And of course, different kinds of companies, so not a apples to apples comparison. But they have not really lived up to that expectation later. Do you think that will have a bit of a chilling effect for investors as well when they look back on very vaunted and celebrated IPOs and then what eventually happened?
Yes, absolutely. I think the retail sentiment is definitely affected and driven by the performances of the recent IPOs. And when we look at the IPO performances, of course, last few months have not been that great. And we've seen that some of the overly hyped IPOs have gone through some sort of a de-rating, and some of their performances also have not been great. But I think the point to look at is that is this time frame, that we are looking at to benchmark the performance of the IPO, is that good enough? And I have data in front of me which says that the average return post listing across all the IPO is about 11%. Of course, it's an average return, so some of the IPOs would have got much better returns. Some of them would have turned negative also. I think the point is that the IPOs are the biggest catalyst for getting retail accounts into the system. And of course, if the quality of the company is good and backed by some good valuation, it would strongly make a case for investment into the entire equity market ecosystem. So I would definitely go for retail investors participating in it. Yes, they have to use their discretion and judgment and decide as to which companies to go for and what sort of allocation they are putting into IPO. Are they getting too aggressive, or they are putting maybe 3, 4, 5% of their capital into each IPO? I definitely think it makes a lot of sense to go for it.
Aditya, you talked about some of the factors that we have to look for closely, and we don't know the details of the DRHP yet. So that is the big mystery. But even so, since there are so many insurance companies in the listed space, at least there are few insurance companies in the listed space, what are the factors that you will be looking for very closely?
Sure. So, when you look at an insurer, you look at embedded value, you look at the persistency ratio, you look at the combined ratio. So let me just take up the first two, right? So embedded value tells you the net present value of all the future profits of that insurer. And the market cap basically is a multiple on that embedded value. So for example, when I talk about LIC, right? So it's expected to be $200 billion market cap or 15 lakh crores. And the embedded value of LIC is 5 lakh crores. So it's like a 3x multiple on the embedded value. Of course, the highest rated insurer in the market is HDFC Life with a 5 to 6 market cap multiple on the embedded value. And then we have SBI Life and ICICI Lombard, which are at 3x. So, the issue looks to be adequately priced. Persistency ratio for LIC has increased from 66 to 67%, which basically shows that, 67% of the policyholders are still paying their premiums. So, of course, for an insurer, it's always better to have a high persistency ratio because that shows the stickiness of the premiums being paid.
So, we do know that the last couple of years have been tough for insurance companies, life insurance companies as well, because, we've been in the middle of a pandemic. There have been larger claims. So some of these factors will have to be looked at. Aditya, do you think what works in LIC's favor perhaps is that the worst of the pandemic seems to be over right now, and how that would translate into claims?
Yeah. So absolutely, you're right. It has been really bad 2 years for the whole BFSI sector. But then again, it can be an opportunity, right? Because going forward, a lot of these companies are going to do well. Now, for example, when I talk about the whole BFSI sector, right, the credit growth in the economy is at a 45-year low. And like you correctly said, insurers had to pay a lot of claims, and the economy has bounced back, resilience is seen. So of course, the claim reimbursement period has really gone out of the system. So yeah, I definitely feel that it's going to be a good time for insurers and the whole BFSI sector.
Let me come to you on the broader perspective, which we started with 29, nearly 30 crore policy holders who will now sort of have a gateway. This is like a very strong push for them to enter equity markets with a brand that they know and they trust. What do you see as the pros and cons of this kind of a situation? Obviously, market participants are very excited that you will have more depth to the market, more numbers to the market. How do you see this picture?
Yeah, so whenever I talk about equities, right?
Sorry, that question is for Mr. Rungta.
Okay,
Questions for Mr. Rungta.
sure.
Yes.
So I think this is a great opportunity to, as Hemangji said, it is a great opportunity to increasing the depth. We have already seen a huge increase in terms of demat accounts that have been opened, stockbroking accounts that have been opened, and it's bringing in a lot of retail money. I mean, just think back 2 years and 3 years, and the market used to sort of move with the foreign institutional investors or the domestic institutions. And now we have this huge counter force, a large part of which is doing systematic investments. I mean, $1 billion every month. That's big in any market. Okay. So I think we now have retail as a very big participant, and it gives depth to the market. So to that much extent, and to the effect that 29 crore policy holders, if they are unique, even if we treat, say, the unique policy holders would probably be slightly less, but still, if even 10% of them come into the market for the first time because of the LIC policy, that's a huge addition to the equity culture. But that is both an opportunity and a threat. This assumes that the issuance will do well, that it will earn some wealth for the investors. Now, if in their first instance, these new people who come in, and this is by no equity, by its very stretch of, I mean, no matter how good the company is, in short periods, in 6 months, 1 year, 3 years, equity may do badly, as some issues have done. And if that happens to a new investor, that's a threat as well. Okay, because as you also mentioned, it has a chilling effect. And, we have had these chilling effects in the past, and then it takes time for the market to recover. So I think it's a huge opportunity because it will add to the depth of the number of people who engage with the equity culture in the country.
Sure.
But at the same time, it is a threat as well. If for any reason there are issues with the pricing, or something happens in the equity market, which may have nothing to do with LIC. Yeah. But still, if the entire market goes down, there is no way but even LIC would go down.
No, I hope and assume that this induction of a new brand, of new lot of equity investors on the back of a large base of policyholders will be done with a lot of educational tools as well to explain, the risks with equity investments and long-term investments, etc. But Mr. Rungta, I want to come to you on the question of discount. Now, we've been reporting that there will be some discount for policyholders. What kind of an incentive would you like to see?
Well, any discount is good, right? I mean, so if if there is one set of people who are paying an X price, and that will obviously be very clear that one section of the market is paying an X price and you are paying a discount, I think that discount is attractive. That definitely it is attractive discount. What the reported discount that even I think your report mentions is a 5% discount. It's very, very attractive.
Sure.
Hemang, just your thoughts on what should sweeten the deal for policyholders and what would be enough?
So Tamanna, there are two aspects when we are looking at pricing the issue. One is that what is the valuation at which the issue is priced for all the investors, and whether it is at a substantial discount to the existing private insurance companies, and two, for certain categories of investors, whether it's policy holders or retail investors, do we have incremental discount in the range of about 5 to 10%? So I think these are the things that will definitely matter. Just to give you a backdrop, when Coal India IPO was launched, there was a huge euphoria and the valuation was very attractive. And they sweetened the deal with some 5% discount for retail investors. And we had seen massive response, and even post-listing, there was a lot of excitement. So I think we need something really, good in terms of pricing and discount for this euphoria to really translate into big numbers for the entire capital market.
So we'll wait and watch what those details are. Finally, what do policyholders get? But remember, this is a company which has 2/3 of market share. So it's literally like a giant now entering the arena. We will have to see what it actually brings to the table in terms of value. The other aspects are it will really help the government tick the box on its disinvestment targets for this year. So that will enthuse the market overall as well if this is a successful issue at the end of the day. So we're tracking the story closely. But for now, I want to thank all of you for joining us.
Thank you.
Thank you. Thank you.